Good afternoon. Today is Wednesday and the date is June 14. The time right now in Singapore is 4:03 in the afternoon. And let's do a little bit of recap as to what happened overnight on Wall Street. We have the release of the Consumer Price Index, the so-called CPI numbers, which is very much in line with market expectation. On a month-on-month basis, meaning to say we compare May of 2023 to the April numbers, we have an increase of 0.4% in the CPI numbers. And of course, on the year-on-year basis, comparing May 2023 to May 2022, we have a 4.0% increase in the CPI. Like I say, it is very much in line with market expectations. So basically, this is in 24 hours ahead of what the FOMC meeting is going to decide tonight at 2 a.m. Singapore time, which technically put it on a Thursday. And market expectation is that the Federal Reserve is likely to pause because the number that we saw overnight did not suggest a hot CPI numbers or on a month-on-month basis. In fact, this may actually give the Fed the cover to actually pause going forward, and market has more or less expected this action by the Federal Reserve. And if that's the case, the market does tends to view this development as positive for equity markets. So overnight, we can see that both particularly all equity markets index in the US has actually risen by a little bit. And as far as the Dow Jones is concerned, what you can see in front of you is the 4 hours time frame Dow Jones chart. And of course, we can see the market went up to a high of 34,410.3, which is marginally below the January high or the year's high at 34,342.3. So whether or not the market can actually punch through this level remains to be seen. I think the odds are very, very good because the market does want to go up. And but in my view, the level to look out for is not the 34,342.3. In my opinion, the level to look out for is 34,712.3. This level, if it's been breached, will means there will be a monumental change in the sentiments going forward in US equity, in particularly the Dow Jones. We all know the Dow Jones has been lagging behind the other two equity index in terms of the S&P 500 and the Nasdaq 100 in terms of bullishness. So it will be quite monumental for the Dow Jones to actually trade into a new high for the year and basically take out 34,712. So it remains to be seen. But my opinion is that this is a situation in which the market possibly is overstretched, and I tend to believe that this is possibly a moment in which we could be buying the rumor, selling the fact. I mean to say, when the Federal Reserve actually pause, then it may actually provide the catalyst for those who are really long to basically exit the market with a profit and look to see if they can temporarily take profit and see where the market drifts to. So in this case, if the market do drift downwards, my target is about 33,300 levels for another run up in equity prices. So in the meantime, this market is quite vulnerable to the downside, in my opinion. In the S&P 500, we can see that the S&P 500 has actually gone up to a new high for the year, and that is actually conditioned on the market being able to extend even higher. The high traded so far overnight is 4,373.64, which is only a hairbreadth away from my target range of 4,426.3 to 4,517.13. So this bracket is actually quite vulnerable to the emergence of a selling interest, and likely to be the case, and especially if the market do take out the nearby support line represented by these dark gradients over here. So if that's the case, then there is a possibility the market may go down and test the 4,100 levels. In the Nasdaq 100, this is the market that has been taking the market higher so far this year in 2023, and the new high traded overnight was 14,931.8, which is only quite a distance away from the March of 2022 high, which is currently at 15,265.4. So if the market do take out this level, again, this level will be crucial, very much like what I just mentioned in the Dow Jones. 15,435.4 is the critical level for me. If a breach over here will suggest that we probably will see higher prices in the coming months. But in the meantime, this market is a little bit overstretched, and if it does pull back, I won't be surprised. And if that's the case, assuming the high is 14,931.8, then there is a possibility the market may pull back to the 13,800 levels going forward. Over in Asia, we can see that the Nikkei 225 has been taking the prices higher, and this afternoon we have a marginal high relative to this morning prices. The high traded so far today is at 33,665.5, and this is already beyond the 1990 June high of 33,345. So this lays the background for the extended rally in Japanese equity markets. So will it also cause the market to unravel going into tonight's FOMC meeting? It remains to be seen. But for now, the market seems to be technically strong. That suggests that we may be able to see slightly higher prices going forward. Over in Hong Kong, we can see that the Hang Seng Index has struggled at the 19,521 pivot lines, although it did manage a marginal high at 19,641.1 this morning itself, but it appears that it does not be able to hold on to its gain. And if this is the case, there's a risk that the market may actually unravel and to trade below 18,000 at some point in time. And if that's the case, there is a real possibility the market may actually extend all the way to the 17,000 mark. Over in mainland equity markets, you can see that the CSI 300, although managed to punch beyond the 3,800 levels, is currently struggling, but that's a good sign, because the fact that the market is able to punch to the 3,800 levels suggests that maybe we can see further upside, but that upside here will be limited to 4,000 points. And in the event this market pulls back, I think there's a very great risk that the market may actually punch below 3,777 that we have seen so far this year towards the November 2022 low at 3,665. In energy markets, we probably will be seeing the extended rally in the WTI, which is the West Texas Intermediate crude oil. We have seen prices manage to recover from a low of $66.77 overnight, purely on the idea that China, the People's Republic Bank of China, has cut interest rate marginally by 0.1%, and that is a sign that China is trying to stimulate its economy, and China being the largest oil importer, that it will obviously put a floor under energy prices, and because of this, we are beginning to see energy prices beginning to creep higher. Over time, if the market take out the May high of $76.07, we may see energy prices continue to extend towards the $80 per barrel mark. In precious metals, we can see that gold has been struggling. Overnight, we have a rally attempt that failed at 1,971 before market goes back to try the $1,930 levels. And if this level is taken out, there is a real possibility market may actually attempt to test the March low at $1,885.75 and possibly even lower to $1,864. So near-term precious metal seems to be on the defensive, but overall this market tends to, in my opinion, is a buy market over the medium to long term. In silver, we have seen the silver market momentarily breach the support line overnight, and we have a low at $23.60 before the market popped back up above the support line. And in the meantime, because of that breach here, there's a real risk that the market may actually extend lower going into tonight's trading to challenge the most recent low at $22.68. In the currency market, we can see that the dollar index has actually dipped back into the lower end of the range itself. We have seen the market this morning traded to a marginal low. Let me reduce this and come back with the actual low here. The low we have this morning is 102.80, and this is actually a bracket of prices which I think is favorable to the buy side. This bracket in which I'm looking at is 102.56 to 103.04, and if the markets manage to hold out to above 102.55, I think there's a real possibility the market may find a bottom here to for its next extension rally, because the rally from 152 in May last month, extending to 104.62, appears to be incomplete. So we have a three-wave pullback here, and if that's the case, market should be able to find a bottom somewhere near today's low prices before they extended higher to test the March high at 105.87. Conversely speaking, if the dollar is weak right now, we're beginning to see that the euro dollars is also managed to have a peak here, because both are actually a mirror image of each other, and the high overnight is 108.23, and the market has since come off the bracket of prices which are deemed to be vulnerable to selling pressure, and that level is 108.10 to 108.45. If this market do take out the 106.35 levels, it may extend all the way to test the March low at 105.15. In sterling, we can see that sterling had an overnight high of 126.25, which is actually unexpected, because earlier on I did mention yesterday that 126 is key, and the market actually did turn down from 126 to all the way to 124.85. And of course, unexpectedly, we have a rally attempt which took sterling back to 126.25. Now, what will this market cause another turnaround? It remains to be seen, but if there is, I won't be surprised, because I think that the general idea is that if the dollar strength comes back, all the other major currencies will have to fall back. And if the market do take out 124.85 this time, again, I think the market will extend lower to 122.5. Over in Aussie, we can see the Aussie market has actually briefly penetrated my ideal trading range between 0.6760 to 0.68. Market have a marginal high overnight at 0.6807, and is struggling within this bracket of prices right now. And I do believe that there is the possibility market may extend lower going forward. And my ideal target is somewhere between 0.6590 to 0.6635. Dollar Canadian has always been the one that's leading the market down from 136.55 all the way to 132.85, and it does appear that the market may have found a bottom somewhere around the recent low at 132.85 and is getting ready to rebound. And if we do see a extended rally here, the top side could be about somewhere about 134.70 to 135.10. Dollar yen has been a bit of a mystery, because the market has been caught within a triangle pattern. So of course, in any kind of triangle, there are five-way structure within the pattern itself. We have the A, B, C, D, and the D appears to be in place, and we'll possibly see a marginal pullback to test the 139 levels to complete the E before dollar yen started to rise again. And if it does stick out the 141 levels, it may actually attempt the November 2022 high at 142.25. Now over in crypto, we can see that the Bitcoin itself is struggling. Overnight, we have a rally attempt to $26,422, but it does not seem that it is able to hang on to its gain. Going forward, it's vulnerable to the downside. If we do see a price range, traded below $25,350, it runs the risk of extended decline all the way to $23,200 levels, to even as low as $22,000. So this is all I have for you. In the meantime, I'll come back to you with another update tomorrow morning. Bye bye. Take care.